Hey everybody, it's Mark Pruitt with Strategic Estate Planning Services for another strategic update. I thought I would touch base with you in regards to things going on in the world. And as far as your accounts, I'm definitely not going to rehash Russia and all of that. You've probably seen the news and you understand exactly what's going on there. But I can tell you it's interesting to always see how markets react, whether we think it will have anything to do with our economy or not. It's just markets hate uncertainty, and so when they do, they tend to react the way they have. In fact, I'll show you, if you'll look at the screen right quick, we'll throw that up in regards to kind of the history of the market, and you will see from this history that you're looking at all the way back to Pearl Harbor, it shows you kind of how markets reacted a month later. Doesn't show you necessarily the day of, but I can tell you, you see how they've reacted 1 month later, 3 months, 6 months, 12 months, and you're going through all the way from Pearl Harbor, and you look down, you see the Iran hostage crisis in '79, you see invading Iraq and Kuwait there, Gulf War, 90 and 91, then you even see 9/11. And then you see the Iraq War. So you can take a look at that and kind of see how markets reacted as far as a 12 months later. And that becomes important to think about. And so when those things happen, you don't want to be reactive. That's interesting. We had already felt like that there was going to be a tightening of the market, which we talked about in last quarter of 2021. And we talked about the tightening of the market. And then that's actually right on cue. That's happening even before Russia. And so Russia has basically sped some of that up. And so in regards to knowing that, we've continually made adjustments and made adjustments when we felt like we needed to. I'll give you some examples. We saw the S&P is now in correction territory from its January 3rd all-time high of this year, 2022. It's now down over 10%. And so once you get over 10% in the S&P, that is now correction territory. So we got out of the S&P and started layering out of that late December and in January. So it makes a big difference there, so we're not mirroring that. Same thing with the NASDAQ. The NASDAQ is now down 14% year to date. So that's something that we got out of NASDAQ. We did that also in end of December, 1st of January, and that way we're not mirroring that either. So the point is to not mirror some of the losses. Doesn't mean that we can't keep losses from happening, but they should not, we're trying to not be the exact same losses to where that makes it a little easier for recovery to begin when that recovery time comes back. We will tell you as far as interest rates, when you look at this next thing that will be placed up on the screen of what do we think is going to happen with interest rates and when do we think it. And if you look at that, there's really two different things that are being looked at. And one of them is a measured pace where they say that you will see growth decelerate, you'll see tightening, which we've talked about, still have supply chain issues and demand and imbalances there. That will begin, and we've actually already seen that that's beginning to normalize, but it's a slow pace, and my gut feeling is it's still going to be the rest of this year in order for that to occur before it begins to right itself. How many hikes on the measured pace? You see 3 to 4. I think it's important if you look at both of these of when is the start date. My thought was exactly this of March 2022, and that is now what's being shown here as well. So I feel like personally it will not be the aggressive one, which is the one on the right you're looking at, but it will be the one, I think, with a more conservative one and measured one. Then they'll basically measure to see if that's beginning to tamp down inflation or not. I think you need to understand that just because you raise interest rates, it doesn't immediately stop inflation in its tracks. It just doesn't. It will still take time for that to occur, but it will begin to go in the right direction, which is what we're all hoping for. In the meantime, we've made the corrections that we've made. And then here's the thing I would tell you to remember as well, is many of you have what I consider, same thing I have, is you have safe money. You have that through fixed interest rates of annuities, whether it be fixed annuities, indexed annuities, even some of the life insurance that has fixed rates to them. That's what I call your safe money. And so that's important to remember, that sometimes if we're not careful, we just look at the shiny object in the room, and that happens to be one particular account or these particular accounts. And what we're looking at, while we are looking at those accounts, what we're really looking at is the estate as a whole, the entire estate. And so you have to remind yourself too, you have some safe money over here. I have safe money. I don't have to worry about that money. It's there. It's not going to wobble in regards to variables and market risk and all of that type of stuff. It's a fixed rate, and it's there by design. So keep that in mind. We will come out of this. We still expect this year, this is my personal opinion, that I think the markets will still end up higher before the year is up, but it's not going to be the first half of this year. I think it will be toward the second half of this year. And so keep that in mind. That's simply a projection. That's my personal feeling. But I would tell you, just remind yourself of the safe money you've got. Remind yourself that we are taking actions. We're not mirroring the markets in regards to the amount of loss. There's still going to be some loss in there, but there is a difference in the question of how much loss. And so the more we can cut that loss and mitigate that, makes it much, much easier on an upswing. So keep that in mind. If you've got any questions at all, feel free to give us a call at our office, 1-800-381-8870. We'll be more than happy to talk with you about any detail that you may want to know that's bigger than this or more detailed than just the overview that I gave you today. Hopefully this has been helpful. We appreciate you being with us. We thank you for your trust in us. God bless you guys. Have a great day and a great week.